Hello everybody and welcome to another amazing video of DIY investing. For today's video, we are going to be talking about 4-year cycles and analyzing what the next beginning of our bull run is going to look like. This is very important because this is going to give everybody an idea of how every single one of our prior cycles has played out, how to know when to get in and out, and the way that the market structure is going to take place, and then most importantly, mapping out the time frame so that we know when to exit out of this bull run cycle top and realize all of the gains that we make over this next cycle. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Now inside of my last video, make sure you guys go back and watch it if you have not, but inside of my last video we basically talked about the way that the reaccumulation takes place inside of every Bitcoin trend. And I feel that this is a very important topic to cover before we jump into the 4-year cycles, analyzing what this next cycle is going to look like, what we're most likely going to be targeting when it comes to taking our profits, because it's now the most important time than ever before to be preparing for accumulation and be preparing for that next cycle. The people that are always earliest to the very beginning of the trend are always the ones that make the most amount of money, and I can speak from personal experience as somebody who was there very early. In fact, I bought my first Bitcoin at $450, so I was there at the very beginning of that last bull run of 2016 and 2017. Now, inside of our most recent cycle, I ended up getting the majority of my exposure in fairly late. It was basically at the very beginning of 2020, right here, that I started to heavily buy more crypto. So with me trying to learn and grow from all of my prior mistakes, this is basically going to simplify a lot of the lessons that I've personally learned in hopes of being able to teach that back to you guys that are looking to make the most profit possible. Now, there's always going to be the people out there that are going to deny everything. They're going to fight to the tooth and nail, saying that the bear market is still in, the bull cycle is not anywhere close to being started, and those are the people that are just going to simply have to be buying late. And that's fine. Even with buying fairly late into the cycle, it's still relatively early considering the fact Bitcoin goes on massive expansions in price. So what I figured that we would talk about today is basically the way that every single new cycle starts and how to go about positioning yourselves ahead of time and knowing when the opportune time to be in and out of the market is. Now, what we talked about was basically after every single bear market bottom, we go through a period of reaccumulation. Inside of our first cycle, we basically can draw an early trend line, and this early trend line is the foundation leading into our massive expansion into price discovery. We had our cycle low here at the beginning of 2011. We saw our first impulse out of the bear market bottom. We got a period of selling, which ultimately ended us coming back down into contact and our first data point inside of that new trend line. We kind of consolidated sideways, and then we make our next impulse. Once again, higher highs and higher lows off of this beginning trend line. Now, this is what's known as the reaccumulation. Had you have bought at any point throughout this reaccumulation, even if it wasn't the exact bear market bottom, you still would have been able to make a lot of profit had you have held throughout the entirety of that next parabolic move. And so that's why I say that even if you're somebody that's still too stubborn to accumulate while we're at these low points of the cycle, while we're at the very beginning of that new impulse, there's still opportune times to get in, and that's what I think is important that we cover today. Now, after our parabolic cycle top, we get our next bear market, and then we come to our next cycle low. Now, once again, once we begin the next uptrend inside of that cycle, we can see that we maintain higher highs and higher lows as we build a strong supporting foundation of support heading into price discovery on the way back up. And this was the way all the way throughout 2016 to the very beginning of 2017, where we can see that we made higher highs and higher lows as we continue to build support on this mean trend line. Now that takes us into the price discovery, the blow off top, and we start another bear market. After the ending of this bear market, the same thing happened in 2019, where we start this supporting trend. This one was a little bit different in the way that it got much more parabolic in a quicker period of time than what we saw inside of our prior cycles. But inside of our prior cycles, we basically saw two impulses before our parabolic move into price discovery, and this was pretty much the same thing here inside of our 2016 cycle as well. Now, there's really no difference between this one and the move back down. The only difference is the fact that instead of doing two impulses, we pretty much just did both of those inside of one major impulse. And so nothing really changed that much. It's still the same market structure. It was just a bigger move off of the lows and then a deeper correction on the way back down. Keep in mind that this sell-off if we move our drawing tools, this sell-off here was a 40% correction. This one here was about another 40% correction. This one was about a 38%. This one was another 40%. And this one was about double the size of both of these impulses. And on the way back down, it was also about double the size of the sell-off. This one was a 72% correction from the high to the low. This one was a 40, this one was a 40, this one was a 40, this one was a 40. So we can see that nothing really changed. It was just a much bigger expanse on the upside as well as a bigger sell-off on the downside. Now this takes us to our current cycle today, and the reason why we're talking about this is because I believe that this cycle is going to behave a little bit more accordingly to the very beginning of our first two reaccumulation cycles. Because of the fact we had such a massive expansion off of our range lows at the very bottom of our cycle, it makes sense as to why we saw such an extended correction on the way back down. This was a 70% correction. Now, inside of this cycle, I personally believe that we're not going to be seeing the same type of expanse to the upside. I don't think that we're going to be having quite as large of a move off of our accumulation lows. I believe that we're going to follow a lot more accordingly to what we saw in 2016, as well as what we saw in 2011 and 2012. And so with that being said, what I've kind of talked to you guys about is once we hit 27K, I'm expecting a pullback back down. And if anything is... And if our prior cycles are any sort of blueprint as to what we could happen inside of the next year or two, I think that what will most likely play out is us, after we hit 27K, to pull back, and that will give us our next data point as to where our trend line is going to take place. Because if we zoom in here, after every single one of our impulses out of our bear market bottom, we begin our sell-off that basically takes us onto contact with that trend line. And in 2016, we can see that we bounced off this trend line a number of different times. Even inside of our first cycle, we bounced off of this trend line 3 different times. Inside of our 2018 and 2019 cycle, we can see that we bounced off of this a number of times, about 3 or 4 different times, maybe even 5, depending on where you're drawing it. The only difference was we had deviation from that trend because of the black swan event being COVID. Now, black swan events are something that nobody predicts. Black swan events are something that happens inside of the economy that ultimately cause all of the markets to panic as a whole. So it doesn't make... So in my opinion, we're not going to expect to see another black swan event. It would make more sense that we would follow along with how our prior cycles were, assuming that there isn't some major, capitulation event that takes place across the entire global markets. Guys, COVID was that once-in-a-lifetime type of thing, a 100-year cycle. We could go back to the Spanish flu as being really the only other example of anything even comparable. And so we shouldn't expect to see another random black swan event take place. It is possible that something could happen, but the likelihood of that happening are very low because of the fact black swan events are basically just unheard of things that happen. You can't really predict it. You can't really assume that anything like that is going to happen. They happen. It causes the whole market to panic, and then we move on from that. It makes sense to me why after we saw that black swan event, we immediately rebounded and went straight back to this trend line. And what that tells me is that there's going to be a reaccumulation structure that takes place inside of this cycle where we're going to build a foundation on some type of supporting trend. And if we're going to be talking about this heading into this cycle, it's important to analyze what that's going to look like right now. Now, like I've stated, I believe that we're going to hit 27K and then we're going to get a pullback. Now, wherever the bottom of that pullback is going to be, in my opinion, it's going to take us back down to around $19,000 to $20,000, somewhere right around that range. And it's going to be us retesting, let's make this a little bit smaller, it's going to be us retesting this prior consolidation range that we were holding on heading into the FTX collapse. And that was this 5 or 6 month range that we held support. We got the FTX collapse, and then we saw a lower low. And so this lower low was ultimately deviation. And now that we've already bounced all the way back up to near the August highs, that was confirmation that that move was nothing more than just deviation. And so even though I do believe we're going to go a little bit higher, we will go through a period of correction. We're going to have to come back down and truly cement where our foundation is going to be, right? Every single bull cycle starts the same. And this is across the board on any sort of market that you trade. There's always going to be higher highs and higher lows on a trend line. And that's what is basically encompassed inside of a bull run as a whole. There's always going to be a certain level of support, a certain trend line that the prices grow and accumulate off of. And then, ultimately we would expect to have some type of a blow off top. But I don't believe that that's going to be happening until probably sometime after mid-2024 into 2025. Now, this next year to a year and a half for us is going to be a period where we're simply going to be looking to dollar cost average and buy this trend line. Every single cycle up to this point has had a period of reaccumulation off of a mean trend line, and every time we've hit this trend line, that was a time where you could have been buying and dollar cost averaging. In 2016, we got a number of different attempts off of this trend line to be dollar cost averaging into. Even in 2019, we got the same sort of thing. The only difference here is it was a little bit tricky with the deviation that we saw because of the COVID black swan. Now, with this cycle, in my opinion, being a lot more consistent, us not necessarily factoring in or expecting a black swan event to take place, I believe that no matter what the price action decides to take, no matter what the direction it takes, we will end up creating a solid foundation of support, and that's where we're going to be wanting to look to target for entries. If we're holding based off of the cycle low, or if you've been buying throughout here, during this impulse upwards of 27K, I think that that will be a very good opportunity of taking some short-term profits. If you're somebody that's strictly focused on the long term, you're not trying to trade at all, do your part by holding, because we know that we're at the very low point in the very beginning of a new cycle. So I don't think that it's bad on your part to just simply look to hold, because many people are going to be trying to predict the market. Many people are going to fail in doing so. The only reason I'm willing to do this is because this is my 7th year in crypto. I've learned a lot from my cycles. I've learned a lot by just simply focusing in. This is literally what I do full time. And so in my situation, it might be a little bit different. I might encourage people to take profits at 27K, but at the end of the day, you guys have to just understand that it's ultimately your own doing. You have to do what you think is best. And if you don't have enough confidence in yourself to, try and get in and out of the market and time it, I would just highly advise as to accumulating sell-offs that take place. Because every single one of these sell-offs, this was a 40% sell-off, this was a 40% sell-off, this was a 40% sell-off, and this was a 40% sell-off. And so, assuming that we end up not making a massive expanse off of the lows like what we saw in 2019, we would expect to see, anywhere from about 25 to a 40% correction as we reaccumulate on this trend. Because Bitcoin is worth so much more, because there's more liquidity than ever before, we might not see a full 40% sell-off. We might see only, 25 to 30%. But nonetheless, we will see periods where we correct and we come back down to retest a trend line, and that's where we want to be buying. And I think that it's very apparent based off of our prior cycles that we have a clear form of analysis that takes place where once we begin the new cycle, once we start correcting and making higher highs and higher lows, we always build some type of supporting foundation of support that we can look to target for reaccumulation. And so no matter what the price action looks itself, whether it's similar to this or whether it's unique in its own way, which it very much will be unique in its own way, that's the way every single cycle will work. What I'm talking about here is the fact that depending on how big the impulses are off of the lows will dictate how big of a correction we'll see to the downside. And so if we end up rallying and we only hit 27K, we're not going to be expecting to see a 72% correction on the downside, right? We would expect to see something a lot smaller, something more consistent with these type of moves down here. Now, if for whatever reason we see a much bigger impulse where Bitcoin rallies all the way upwards of about $30,000, at that point, we would expect to see a deeper correction. And that's just the way markets work. That's the way momentum works. Any move to the upside is going to have, a move to the downside. And so the bigger the move to the upside, the bigger the move to the downside will be as well. What goes up must come down. Even though we are expecting to be inside of a bull run where we maintain higher highs and higher lows, the bigger the impulse, the bigger the move to the downside will be, because inside of every cycle, no matter how much we move off of our supporting foundation, being our trend line, no matter how far we move off of that trend line, there's always a period where we have to come back down onto support. And, ignore the COVID black swan event and look at all of our prior cycles that don't have some sort of black swan event. And that's the case every single time. We distance ourselves from the trend line and then we pull back to that same trend line. And that's the case every single one of these impulses. This impulse right here pretty much corrected the entirety of that impulse. And so if you're somebody that's only willing to buy, when the market's going up, chances are you're going to end up having to hold on to a loss, and you're much better off just having the patience to buy the retest of this main trend line. And so with that being said, guys, let's talk a little bit about 4-year cycles, how this is going to factor into our next cycle, and just basically understanding when and where to take profits. Now, if we look back at Bitcoin's history, we can go all the way back to November of 2011 as basically being our beginning of the 4-year cycle. Now, even though this 4-year cycle wasn't fully 4 years, it was only about 3 years, this is where we start to follow that same trend line. And we can see here that every single bear market bottom, we bottom here at the winter timeframes. This was November of 2011. We fast forward to the next major cycle low. This one was January of 2015. And then if we draw another data point over to the bear market bottom over here in 2018, that was December of 2018. And so basically, we've seen this 4-year cycle playing out. The only difference here is in this first cycle, it was a little bit shortened, and a lot of that had to do with the fact that there was just a lot less liquidity at the market at the time. Bitcoin was a low cap crypto at the time. It was the only one. And so it didn't take very much money to see these extreme expanses in price. Now, in the same sort of rule of thumb, once we got to this point over here in 2015, that's where Bitcoin was valued at a couple, $3-4 billion in total market cap. And that's where we start to have enough liquidity where Bitcoin gets synced up to the 4-year cycle trend. And ever since that point in 2015, we've seen an exact 4-year trend that has played out. If I draw this a little bit more over here, we'll see that. 1,450 days equals 4 years, and the way that you measure a 4-year cycle is by measuring peak low to peak low. And if you notice here, every single peak low happens in the winter time frames. This one was January, 1,428 days, basically 1,450 days takes us to our cycle low here in December of 2018. And now fast forward to what we're seeing today. If we draw our major cycle low happening in 2018, December, all the way over to the very low point of the FTX collapse, you're going to see that it was the exact same time as what we saw from 2015 to 2018, as well as 2018 to the FTX collapse in November of last year. And so this is why I say that it's important now more than ever before to focus on the way that you're going to be accumulating heading into this next cycle. Because if you follow 4-year cycles like I have, I've been able to make a lot of money off of doing so. And now that we've got our major cycle low and our next data point heading into the beginning of our next 3-year uptrend, that's the point that we should be focusing on. There's going to be people out there that are going to be calling for 10K. They're going to sit here and say that we're going for one more low, and these people are simply just going to continue to stick to that thesis until the beginning of the trend continues to start. We continue to make higher highs and higher lows until eventually those people end up buying as we're breaking out of those all-time highs because they finally realize that they were wrong. I'm not one of those people that, is so bearish that I'm having that blind the long-term prospect for me. I know that the 4-year cycles are true because we have an entire, 10-year price history of it following perfectly to the same trend. And so basically since 2015, we have 7 years of perfect 4-year cycle theory to analyze. And if we go all the way back to the very end of 2011, even though this was only 3 years, it still synced up to what we would expect to see inside of a 4-year cycle. And so with us already seeing the exact same pattern playing out once again, I'm betting big on another 3-year uptrend. And that's the way every single cycle works. If you come over here and we take a date tool from the cycle low to the cycle top, this is 3 years. 1,064 days is approximately 3 years in time. If we come over here to 2018 from the cycle low, and draw a data point all the way over here to the top that we saw at 69,000, that was once again the exact same time frames. This cycle from cycle low to cycle high was the exact same as our cycle low from 2018 to our cycle high over there. It's the exact same period of time, and it's not coincidence, guys. If you can draw a data point and sync up to the exact same day from a cycle bottom to a cycle top being 3 years, and then if you also draw a data point from the cycle low to the next cycle low, and it also equals the exact same time frames over a 7-year trend, I don't think that you should sit there and say that, we're going for a lower low when there's really nothing that's telling us that we're going to go for a lower low, and there's everything over the course of a 7 to 10-year trend that is telling us that the bottom's already in. And so if the bottom is already in, based off of all of our prior 2 cycles that we can draw data points off of, we are going to be expecting a 3-year uptrend. This was 3 years. This was 3 years. We're going to expect to see roughly the same sort of thing play out. And so while the market structure itself will look different, we can't say exactly what the structure will look like, but what I'm betting on is another one of these to play out to some equivalent. And really, if we come down here, I'm going to draw this a little bit different so it doesn't look too crazy. I'm going to be looking at it something along the lines of this. And this is kind of what I've personally been drawing. I think that this will be how our next cycle ends up playing out, and we'll get a cycle top that takes us to the end of the year of 2025. That's the way a 3-year trend is supposed to play out for us. We're going to be looking at our next major cycle top happening at the very end of the year of 2025. Because that'll be 3 years from our cycle low, right? If we draw a data point from the FTX collapse, we go 1,064 days, that's basically going to be, October, November of 2025. And I think that that's the best play to look to take profits. There is also the scenario where we get a left translation, where we end up topping prematurely of a true 3-year uptrend. And that's something we should also consider. And I talked about that in my last video, where if we're sitting at new all-time highs heading into our next Bitcoin halving, at that point I'm going to be looking at this next cycle being a lot more according to a left translation, where instead of getting a 3-year uptrend into a cycle top, we would end up topping around 15 to 24 months in length. And then after that, instead of having a 1-year bear market like all of our prior cycles have been, we would actually end up seeing, a multi-year bear market, 2 to 3 years in duration. Because keep in mind, guys, every single one of these cycles has been the same. If we analyze from the high to the low, that was almost 1 year, 413 days. If we come over in 2018, from the high to the low, this one was almost exactly 1 year at 364 days. And if we come over here to the high that we saw to the low of the FTX collapse, this one was also almost exactly 1 year at 364 days. So there's a reason why these sync up so accordingly. And there's no better form of analysis, in my opinion, than time itself. The price action is going to vary. Sometimes some cycles are more parabolic than others, and that was basically proven inside of this cycle, where we never really saw a true blow-off top. Technically, the blow-off top in max euphoria happened over here at 65K. Even though we made another high, a new all-time high at 69,000, this wasn't really peak euphoria. Yes, a lot of altcoins made new all-time highs, but if we're looking at the max amount of altcoins, there was many altcoins that made lower highs during this move right here. So that's why we can't bet on the uptrend itself as playing out exactly the same, but we know that the uptrend as a whole from analyzing cycle low to cycle low is always exactly the same. It's always 4 years in duration. And so with us getting ready for this next cycle, no matter how it looks, no matter how it differs, I think that we should be prepared for a longer period of reaccumulation in the similar ways that we've seen in prior cycles. This cycle was the exact same. The only difference was we had the Black Swan event. 2016 was very similar, where it took a long period of time before we actually started breaking out and making new all-time highs. And if we draw a data point from our cycle low all the way to the point in which we made new all-time highs, you're looking at about 833 days that it took before we were at that point. If we come over here from 2018 to the point where we started breaking all-time highs, it was about 700 days. So a little bit shorter than 2016, but not by much. We're looking at, a couple years before we're actually at the point before we're breaking out and making new all-time highs. The blow-off top is always the shortest event. And so if you're somebody that's looking to, what to expect heading into this next cycle, if we draw a data point from the bottom and we go 750 days, just give it in between the middle, we're going to be looking at around mid-2024 before we're at a point of us actually going into price discovery. So there is plenty of time for people that are wondering, even if you didn't buy at the exact cycle low, even if you're just waiting and buying right now, or if you're somebody that still thinks 10K is on the table and you're going to be waiting and not being willing to buy, what I would say is that you have time nonetheless. I didn't get really heavily invested into the last cycle until right here at the very beginning of 2020, and I still was able to make a ton of money during this entire upswing when Bitcoin went to 65,000, even when Bitcoin went to 69,000. Even though a lot of altcoins made lower highs in that move, I was still able to make a lot of profit throughout this period of time. And so if you're somebody that ends up getting in rather late, you're buying Bitcoin somewhere around $35,000 to $50,000. Once the parabolic rally starts, that's really where the majority of your profit is made anyways. And so what I'm personally doing is I'm going to be looking to dollar cost average on any sort of dip, wherever we end up creating this next trend line, that's where I'm going to be looking to target. And like I stated, guys, probably somewhere around, $19,000 to $20,000 is where we'll get our next cycle low for our data point taking place off of this trend line, which is going to be us retesting this entire 5-month range that we were in heading into that FTX collapse. And so there is time that you're going to have. It's not like you have to buy at the exact bottom, but the people that are buying now, in my opinion, will make the most amount of money, because it's the people that have the conviction at the very bottom of the trend, knowing that there's going to be a 3-year uptrend. Those are always the people that make the most money because they were earliest to the trend. The people that are always expecting one more final low that never comes, they always end up having to get in rather late. And while late itself is, it's not always technically late. Even if you buy over here at 40 to 50,000, I can almost guarantee you'll make great profit once the parabolic top comes. And with this next cycle, I'm personally looking at a Bitcoin top somewhere around 200 to 250,000. That was my top target over here, and I think that that's a realistic target heading into this next cycle. I'm not going to draw 500 to $1 million because I think that with the fact that we've had more liquidity than ever before, there's more money into Bitcoin, the volatility will go down. And so that's basically the way that I'm looking to trade this next cycle. If you found value in this, leave a like, comment, and subscribe. If you guys want to join the Discord server, if you guys want to follow all the trades that I take over this next cycle, if you want to know exactly what I'm dollar cost averaging as we come closer to this next major dip, I think this is a huge opportunity for anybody that wants to get in early, wants to know exactly where I'm placing my bets, what I'm going to be focusing on heading into this next cycle, AI trends, NFT picks, DeFi narratives, decentralized exchanges. All of that stuff is going to get taught to you guys in the Discord. And so it's now the best time than ever before to be getting in, as we're at the very beginning stages of that new bull run. This is where the majority of profit is made. You make way more money by being early to the very beginning of the bull run than if you do by waiting around until we get the parabolic move. Yes, you'll make profit either way, but I can say that I made a ton of money by getting in rather late over here. Had I have put that money in down here, I literally would have been worth multi-millions more than what I was at this cycle top. And so it really does pay to be early. And if you guys want to know what I'm doing on how I'm positioning in this early part of the cycle, links are in the description to go ahead and sign up. Thank you guys so much for the support. I appreciate each and every one of you, and I really cannot wait to see what we're able to do over the course of a full 3-year bull run. I want to see you guys make the most money possible. That's why I make these videos, even in the bear market when everybody was a hater, even having a ton of haters right now, it does not matter in the slightest, because I know that my ultimate goals have always been to see you guys profit, and I know that with where we're at right now, getting ready for a new 4-year cycle, and have already started it, this is where we're going to see opportunity beyond your wildest dreams. In the same ways I've done it for myself, in the same way I've seen people close to me do it for themselves, I'm excited to see you guys do it as a whole. So thank you so much for the support, and with that being said, I will catch you in the next one. As always, peace out.